everybody. Good to see you again. I am Joe Gallimore, Director of Investment Research with Argent Bridge Advisors, and welcome back to another Cup of Joe. Well, the stock market had another turbulent week as inflation remained very high from April to May. Most stock indexes shed about 4 to 5% during the week and revisited the low points that they touched on from earlier this year. Emerging market stocks, however, did relatively well and only inched down about 0.5%. So that was good to see. Now, the reason for such a tough week was that inflation rose more than most people had anticipated. And it seems that the ripple effects of this suggest that there's going to be a steeper exit for the economy and for the stock market from this problem of high inflation. Even bonds lost some ground last week on this news that inflation suggests that the Fed will likely have to raise their base interest rates maybe faster than they had been signaling, which was 0.5% at a time. So they may be looking at raising rates 0.75% or even 1% at a time. So more on that to come. Now, this high inflation was probably pretty visible these last 2 weeks to most everyone, as we started seeing headlines from around the country about gas prices hitting $5 a gallon. Officially, the national average price for a gallon of gas was $4.88 as of Friday. I know around me it was definitely closer to $5. But that national average of $4.88 represents a 60% increase from the price a year ago. So that is hitting most of us where it hurts. Now, in the midst of all this, you may be looking at your accounts and wondering, why is there not a lot big moves being made or tactical shifts here and there? Well, rest assured that behind the scenes, we are certainly being very proactive. During periods of market decline, we always look at harvesting tax losses to improve your tax picture. We are constantly monitoring the investment funds that we have in your accounts to identify times when it's opportune to rebalance accounts. And we did so back in March when this decline had initially started. And we're also performing research on strategies that try and help us improve risk control in your portfolios. An example of this would be something called buffered strategies, which is a type of investment that can help limit the downside while also allowing for some nice upside potential. So we're looking into those. And last but not least, the foundational element that helps manage volatile times is your overall balance of stocks and bonds. This is the keystone of your investing plan, which is a part of your financial plan. And this is a part that we evaluate each and every time that you come in and meet with your advisor. Make sure it's still appropriate and make sure it is still the right mix for your plan. So that does it for this week's Cup of Joe. Please let us know if you have any questions about this or anything else, and we will get back to you as soon as we can. Have a great day.